And then, of course, the outlook for future M&A. And people have seen us over the last 5 years announce 8 transactions with that recent Scottish Widows Europe deal. So there's really been an uptick in the cadence of the firm, and we remain, really positive about the M&A market and our ability to participate going forward.
Hello, you're watching Proactive. I'm joined by Steve Murray, the CEO of Chesnara. Steve, very good to speak with you. You've described 2025 as a transformational year. What's fundamentally changed in Chesnara's business model after these 2 major acquisitions?
Yeah, nice speaking to you this morning, Stephen. So, yeah, I mean, the 2 acquisitions, they do a couple of things scale-wise for the group. So there's a further material increase in the size of the balance sheet. So own funds, which is a metric that insurance companies use to sort of show ultimately what the size of the in-force book of business is, we're expecting that to increase materially. And then between the 2 acquisitions, when we look at the lifetime cash generation that they bring in going forward, we expect that to be around £1 billion worth of sort of lifetime cash flows that comes into the group. So those things together really do transform the balance sheet, and particularly that longer term sustainability of capital generation and cash flows, which support the dividend.
The HSBC Life UK deal significantly boosts your scale, Steve, but integration risk always a concern. What are the biggest execution challenges still ahead?
Yeah, so we're sort of full force into that at the moment, and our UK CEO Jackie Ronson is leading a designated team looking at that integration. So we're sort of well through the initial planning phase. I mean, some of the risks that you tend to come across are around things like data quality. So in terms of the data quality on the target systems, how does that map across onto the systems that you have? Making sure that we manage the population from Chesnara Life that have joined us. Over 200 colleagues have now joined from that business, making sure they're clear about the strategy. We've embedded them into our business and they can sort of support that integration activity as well. The way we're mitigating that is we've got a designated team of internal experts. We brought some external expertise in, and you might remember we signed a new deal with SS&C, who are providing us with a more modern UK operating platform. So when we look at those things together, and also our experience of already having done 4 migrations onto that new platform, we're sort of confident that we should be able to deliver the required work this year to migrate Chesnara Life onto our UK target operating model.
Steve, your solvency ratio is still well above target even after those acquisitions. How aggressively are you prepared to be on further M&A from here?
So we're going to be really, really focused on that Chesnara Life integration first and foremost, Stephen. I think it's really important that we can show that that's been migrated well and that we continue to do a great job for customers, and also making sure that we complete the change of control for Scottish Widows as well. And the teams that we have working on those are quite different. So we've got good operational capacity there. That said, when we look at M&A processes, they tend to take somewhere between 9 and 12 months at least from sort of initiation through to completion. So given the work that we're already doing on these integrations, we expect to have the operational capacity available in 2027 to onboard further M&A. So we're certainly looking at M&A opportunities now. And you're right to point to that solvency range, because that solvency range plus the liquid resources that we have mean from our own balance sheet that we can likely do another Scottish Widows Europe size transaction, so around 100 million of consideration off our own balance sheet. So we'll certainly be working hard to explore opportunities, but making sure that we're really focused on that integration activity that's already in flight.
Markets remain volatile. Interest rate expectations are shifting. Steve, how resilient is your cash generation model in a tougher macro environment?
Yeah, and look, this is a very volatile environment, but in many ways, if you look at how markets have responded, we've seen this a number of times over the last few years through different market cycles, going all the way back to the credit crisis. And we've been fortunate here at Chesnara that we've got a very resilient balance sheet. We've got a very prudent sort of asset mix as well. So what that means is when you see shifts in interest rates, equity markets moving, our balance sheet is relatively immune to that. And because we've got a lot of surplus capital, that can sort of cushion the impact of any of these markets. When we see interest rates go up, we tend then to find that we make a little bit more return on the assets that we have as a group that can be helpful. So of course we'd rather have more stable markets than we're seeing at the moment, but there's nothing that worries us, particularly from a sort of macro perspective.
You delivered strong growth across all key metrics. What should investors watch most closely over the next 12 months to judge whether this strategy is really working, Steve?
Yeah, well, so when we spoke to investors this morning, it was the first time as well we've updated some of our metrics to make sure that they're a little bit more easily to use to compare to peers, but also they'll remove some of the volatility that you sometimes see within insurance companies' results. So together, we think for investors that will mean you can predict the result a little bit more easily, but also compare it to some of our peers. So we'd certainly be pointing to investors to say we've had a very strong operating capital generation result going forward. We should expect that to continue sort of growing, albeit there were a couple of one-offs this year that sort of helped that number. Looking again at us maintaining a strong solvency position, and also that the own funds of the group, which are a good sign of the future value in the organization, sort of grow as well. So I think if we're seeing those things operating in tandem, that can give investors a lot of confidence. And then, of course, the outlook for future M&A, and people have seen us over the last 5 years announce 8 transactions with that recent Scottish Widows Europe deal. So there's really been an uptick in the cadence of the firm, and we remain really positive about the M&A market and our ability to participate going forward.
Steve, I hope you'll keep us updated with your progress. Thank you very much for taking the time today.
Cheers. Thanks, Stephen.
Steve Murray, the CEO of Chesnara.